I'm John Gimigliano, Principal in charge of KPMG's Federal Legislative and Regulatory Services Group in Washington National Tax. Thanks for joining me today. On November 6th, KPMG sponsored and co-hosted a post-election event with Bloomberg BNA, where several Capitol Hill tax writers discussed the prospects for action on tax items in the lame duck session. I had the pleasure of moderating that panel. I think it's worth revisiting a few key points from that discussion. First, I think it's important to note that all the panelists expect there to be important tax action in the lame duck session, in particular on tax extenders. As a reminder, the extenders are 60 or so items that periodically expire and typically await congressional action on a biannual basis to restore them. Next, it's clear one of the items that will need to be negotiated between the House and the Senate is the duration of any extension of the expired provisions. The House has voted to make several of the expired provisions permanent law. This includes the R&D credit, bonus depreciation, higher levels of small business expensing, as well as provisions affecting S corporations and certain charitable contributions. Also, the Ways and Means Committee, though not the full House, has voted to make the active financing exception and the CFC look-through rules permanent. Meanwhile, the Senate has elected to simply extend the expired provisions backwards to January 1, 2014 and forward through December 31st of 2015. The House and the Senate will need to negotiate whether no, some, or all of the expiring provisions will be made permanent. Third, one of the areas of animated discussion between the panelists and related to the issue of permanence was the question of cost. Making the expiring provisions permanent is an expensive proposition, even by Washington standards. For example, the R&D credit passed by the House would alone cost more than $155 billion. The sum total of the permanent extenders passed by the House would cost several hundred billion. While the Senate has agreed that the cost of a temporary extension of the expired provisions is acceptable, it's not clear that there is either bicameral or bipartisan support for the cost of permanent extensions. The issue of cost must also be negotiated in lame duck. Fourth, the matter of cost always raises the prospect that certain revenue-raising measures could be proposed to offset these costs, in whole or in part. Finding revenue offsets that both parties can agree to is never an easy task and could significantly complicate or even derail the negotiations. Finally, it seems there is some consensus to consider action on a tax technical corrections package in the lame duck. Congress has not acted on technical corrections since 2007. There are a number of items that could be important to certain taxpayers. On the other hand, on the topic of tax treaties, it does not appear there is an easy path to confirming a number of treaties that are pending before the Senate during the lame duck session. Well, that's just a brief summary of the key points from a spirited discussion of the pending lame duck session in Congress. You can watch the full webcast replay of this session by clicking on the link below. Thanks again for joining me today, and please, if you have any questions on this topic, you can contact me, John Gimigliano, at the contact information on your screen.